Let me now turn to the decisions and deliberations of the Monetary Policy Committee, which met on 4th, 5th, and today 6th December. After detailed assessment of the evolving macroeconomic and financial developments and the outlook, because monetary policy is forward-looking, so we have to always look at the outlook, the Monetary Policy Committee decided by a majority of 4:2 to keep the policy repo rate unchanged at 6.5%. Consequently, the standing deposit facility, that is SDF rate, remains at 6.25%, and the marginal standing facility, that is the MSF rate, and the bank rate at 6.75%. CPI inflation for the current financial year, that is 24-25, is projected at 4.8%, with Q3 at 5.7%, Q4 at 4.5%. Going into the next financial year, CPI inflation for the first quarter of 25-26 is projected at 4.6% and Q2 at 4%. To ease the potential liquidity stress, it has now been decided to reduce the cash reserve ratio, that is to reduce the CRR of all banks to 4% of net demand and time liabilities, that is NDTL, and this will be done in two equal tranches of 25 basis points each, with effect from the fortnight beginning December 14th and December 28th. Taking all these factors into consideration, real GDP growth for 2024-25, that is the current year, is now projected at 6.6%, with Q3 at 6.8% and Q4 at 7.2%. Food inflation pressures are likely to linger in Q3 of the current financial year and start easing only from the Q4 of the current financial year, that is from January to March. Going forward, high-frequency indicators available so far suggest that the slowdown in domestic economic activity bottomed out in the second quarter of this year, and it has since recovered, aided by strong festive demand and pickup in rural activities.
CNBC-TV18's 20th India Business Leader Awards.
Well, thanks so much for tuning in to CNBC-TV18. Make sure you follow us and stay updated on all our social media platforms.